U.S. stocks closed lower on Tuesday as investors grew more cautious ahead of key inflation data and amid political talks aimed at resolving the looming debt crisis. The Dow shed nearly 0.2%, the S&P 500 dropped roughly 0.5%, and the Nasdaq shed more than 0.6%. Worries of a potential U.S. government default hang over Washington. While a default could prove catastrophic for the economy, Phil Taves, CEO of Taves Asset Management, says he's surprised that investors have largely ignored the potential crisis.
The problem with the way people are perceiving the debt ceiling issue is that people make the simple statement that, well, we think that they won't allow the government to default. That's a problem in sort of understanding the implications for the markets, primarily because if you look back to the last time it became somewhat of a crisis, which is 2011, we also did not default on our debt, but we came close. So we came within 2 days of having that triggered. And during the lead up to that resolution, we saw the S&P fall 17%.
Investors have been much more focused on inflation, with updated numbers due Wednesday from the Labor Department. Meanwhile, more companies on Tuesday issued disappointing forecasts, among them PayPal, the company's stock sliding nearly 13%, and Apple supplier Skyworks Solutions, which shed more than 5%. PacWest had another volatile day, leading losses in regional banks earlier in the session before closing up more than 2%. And Boeing rose more than 2% after budget carrier Ryanair placed a multi-billion-dollar order for Boeing jets.